Welcome to the Wealth Standing Podcast. This is episode 526. Today is July 15th, 2026. I'm your host, John Pugliano. I'm also the founder and money manager at investablewealth.com. Just want to make some quick comments about the overall status of the market, and I'm going to frame that in terms of three things. I call this SpaceX dud, Hormuz reignites, and railroads chug along. So with those first two items, I want to emphasize what the media is covering and how it doesn't really seem to matter, and then step back and look at the real state of the economy. So as far as SpaceX dud, hey, I'm not going to dwell on this. You know what I think about SpaceX IPO. It should come to no surprise to anyone that it's been such a poor performance. I think the only interesting part of this is that it's happened so quickly. I mean, we're talking here just in 4 or 5 weeks, the price has not only gotten down to the IPO price, which was like 135, but when you factor in that it actually was oversubscribed and opened that first day at 150, that it's not only significantly below that, but a day or two later, it had spiked up to like 225. So anybody that bought at the peak is down like 40%. Again, doesn't surprise me. What also doesn't surprise me, none of the people that called me out for what I said about the upcoming SpaceX IPO, which, by the way, simply talking about my opinion, that I had no plans of buying it. Of course, none of those people have reached out and said that I was right. Wouldn't expect it, though, and I would be shocked if anyone did. And as far as people that may be seeing this as a buy the dip opportunity, hey, I don't know. Again, it's not something I would do with my money. The fact that it's come out of the chute so poorly here, to me, that might be a harbinger of even worse things to come. Okay, and that takes us on to the second item that the media is obsessed with, and this is Hormuz. It's reignited over there. You know, one day the blockades are on or off, or who knows what's going on. The interesting thing I find is that so far, oil hasn't been able to really break above $80, which is, again, very interesting. With all the shooting going on, you would think that it would spike up higher than that. Although we know, of course, that even during the heat of the big battles back in April, it never got much above $100, certainly never near the estimates of being over 200 or 250 a barrel. So again, another story that the media really talks a lot about, just like the SpaceX IPO, or just like whether or not Anthropic will go public, or whether there's a bubble in AI stocks or in memory chips. I mean, they endlessly talk about things either on the upside or the downside, but really when you look at the market, there's really no long-term market impact. Oh, sure, there's plenty of spikes day to day, and individual stocks can easily go up 10 or more percent. I mean, IBM, fell apart yesterday like 25% in one day. But zooming out, looking at the long-term substance, I continue to believe, and this is what the data is telling me, is that the overall strength and the resilience of the U.S. economy is doing just fine. That takes us to the third topic of today, which is railroads just keep chugging along. When did you last receive some spam email telling you to buy railroad stocks? Or when did you see some know-it-all influencer or some other talking head prognosticator telling you to buy railroad stocks? Well, you almost never hear that, but railroad stocks do tend to be a way to gauge the overall health and strength of the U.S. economy. They're a key backbone of the supply side and of the manufacturing side of the overall economy. And I'm going to point out 3 stocks that are in my portfolio, stocks that you rarely hear about. And I want to point out that whether you look at them and their performance over the last week, over the last month, over the last quarter, or over the last 12 months, in every one of those categories, these 3 railroad stocks have outperformed the S&P 500. And even over the last 3 years where they haven't outperformed the S&P 500 overall, because again, all things move in cycles, but it appears the transportation, and specifically the railroad stock segment of transportation, is and has been in an uptrend for at least the last couple years. Because, I mean, if we just zoom out far enough, over the last 3 years, CSX is up nearly 47%. Norfolk Southern is up nearly 40%. And Union Pacific, the worst performer of the bunch, is still up nearly 37%. Now, these are stats over the last 3 years, and this is, technology, if you will, that's nearly 200 years old. But it's still critical and important to the overall U.S. economy, and specifically the way I like to look at it, it's an indicator of the overall health and resilience and strength of the overall U.S. economy. So while people obsess with what the talking heads are saying from day to day, and whether it's worrying about what the new Fed chairman's going to do, or what CPI or PPI inflation is telling us, or all the latest and greatest about large language models, or quantum computing, or colonization of Mars. Listen, I take all of that with a grain of salt, and I'd much rather drill down and focus on real profitable companies that are making money today and likely to keep making it into the future.